Hello everyone, welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. Before we get started this evening, let's do a quick systems check. If you would, type OK in the chat box if you are hearing me clearly and seeing my screen all right. All right, great. Thank you. I have enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know in the chat box. As always, keep in mind that no one trade is guaranteed to profit. I think we all understand that there's risk involved with each and every trade. The flip side of that is that there is a good potential for profits with each and every trade that you take. You just have to work out the risk management on the downside and work out a strategy that hopefully brings the profits more than the losses as you go along. But keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. And we'll go over some ideas about risk management and how our web trader and AvaTrade Go mobile app can help you with your risk management plan and calculations and such. And if you're not aware, you can trade on our platforms, whether you have an MT4 or MT5 account from the web trader and our mobile app. Now, real quick, before we get on the live charts to work out some strategies with today's movements, what is technical analysis? Real quick, for those who are new to trading, technical analysis basically is just looking at the financial charts. Usually a candlestick chart is a type of chart we're looking at that shows the past price movements of the asset, and then trying to look for patterns that look predictable for future movements. And so those patterns could be ranging patterns, trending patterns, etc. And we'll go through some ideas with whatever we see on the chart so you can get an idea of what I'm talking about on some live movements. And certainly you can ask questions, give input as we go along. Indicators are another way to look at technical analysis. Basically, the indicator is programmed to look back at the same candles that you and I can look back at on the charts ourselves. And so the indicator is programmed to look back a certain distance and to give some sort of pictorial representation of those movements and tell you if maybe the movement is overbought or oversold or expected to reverse or continue moving, etc. All the same things that we do manually with our strategies within the webinar. I'm not against indicators, but it's a good idea to understand the manual method so that you actually understand the candles yourselves and the movements, and then add indicators to help support your theories and your ideas that would make sense. Now, what we really want to do is start out understanding the direction of the fundamental news today. And you can start on our main website, and when you log in here, you're in our web trader platform that looks like this, which can trade on top of the MT4 and MT5 accounts. Now, the other option to have the same features that are available in the web trader is to use our mobile app. And I'll expand. We'll first look at the mobile app and go through some ideas with technical analysis. And I'll show you how the mobile app can help with your technical analysis, etc. And also the web trader will look at those features in more detail as well. So let me just expand the view on my phone. And if you haven't downloaded the AvaTrade Go mobile app yet, please do so. It's available in the major app stores. And as we go through the mobile app, one thing I want to direct you towards, if we look at this tab down here in the lower right, if we tap on that, we can bring up some advanced features that come to you courtesy of Trading Central. And that's Market Buzz, Forex featured ideas, and analyst views. And Market Buzz is fundamental news on stocks. We'll skip that for the time being. We look at that usually on the fundamental analysis webinar. The economic calendar also gives you some fundamental news, which we will take a quick look at. And the featured ideas and analyst views give you technical analysis signals for free. So we will take a look at one of those as well. Now, the economic calendar I want to show you because there was some major news that came in today on the economic calendar out of the U.S. And so as you scroll through the announcements that came out today, and this is starting at 7 p.m. if you look here. So if I go to past events, I want to look earlier in the day. And out of the US, there were some announcements that came in regarding inflationary numbers. And so we see the timestamps here. And so we can scroll through, find the US announcements that came out, and it'll be based on your local time as it's listed, I believe, in the timestamp on these numbers. And so we see that the inflationary numbers, inflation rate year over year out of the US, it was a high level announcement, and it was expected to come in the 8 point something range, 8.3. It came in almost as expected, 8.5. So there was actually a sigh of relief that it didn't come in at like 10%, and the market went up, believe it or not, even showing 8.5% inflation, which is traditionally very high. A healthy inflation rate might be considered 3%, something like that. To have 8.5 seems extraordinary, and it really is, but it wasn't much above the built-in expectation. So that was the good news, if there is any, a silver lining in the high inflationary data that came out. The core inflation, which factors out food and energy, we see that the rest of the economy actually came in below expectation at 6.5% rather than 6.7% inflation on the core inflation. And this is year over year, not month over month. So the markets actually went up with that news, even though that's still high inflation, 6.5% on core inflation, but it certainly isn't 10%. So coming in at or below expectation, the inflationary numbers out of the US, while high, not extraordinary in terms of what was expected. And so the markets actually responded positively to that. So that's one thing to pay attention to. And it's probably a good idea before you do your technical analysis to do this sort of fundamental review. And it doesn't take long. You can do it right here from within the app. Sometimes I'm looking at different websites and headlines to get an idea. But you see how simple it is if you look at the economic calendar to understand also what has been going on to drive the fundamental feel of things, to see which way is the wind blowing in terms of sentiment. And so it was positive sentiment largely today with those numbers. Now, if we look at something like analyst views, now we can get some signals and see, well, what do the so-called experts believe is the right direction to trade on some of these instruments. And so we see intraday USD Swiss franc, the signal now is saying maybe trade down. Well, that would make sense if there's still somewhat high inflation and fear dropped today. So high inflation, US dollar, that means it would be weak, right? Currencies are weaker if prices are going higher, meaning you need more of something to buy the same thing. So prices are up year over year, 8.5%. That shows weakness in the US dollar. Fear dropped because the inflation wasn't higher than expected, and so markets were going up. As fear drops, a lot of times the US dollar weakens as the stocks go up. And so you might fundamentally say, okay, this signal makes sense to sell on the USD Swiss franc, or you might look for something different. GBP USD. That also makes sense. If you expect the US dollar to be weak, maybe it gives ground against the pound. And so you pick the one that makes sense to you. And, Swiss franc being a safe haven currency, and if fear has been low today, maybe that's also not the strongest currency to go with. So you want to fundamentally line up which signal you think makes the most sense. And so maybe you think, okay, there's reason for the USD to be weak. And so let's go maybe with the GBP USD and take a look at that signal. So I tap on it and it shows the technical analysis breakdown of this signal. It says the preference, long positions, as long as the movement is above this $1.30 mark, $1.30.05. This is $1.30.05. So as long as the movement is still above that line, this signal says buy on GBP USD with take profit marks at these green lines up here, which are the resistance levels. You see resistance down, resistance down, resistance down. For those of you that don't understand, resistance is a price level that the movement has trouble breaking above, and it keeps pushing the price down. You see that right here. So the expectation was that this movement would challenge that resistance and even break it and go to the next resistance level up here. Okay. Now, there's also the understanding that the signal could be wrong. And if it breaks below this support level, basically they're saying you should have your stop loss below that support and give up on that buy position. And then at the same time, they say the alternate scenario is if it does drop below that blue line, this price of approximately $1.30, then they say look for further downside because it establishes momentum that if it broke this support, then that means there might be momentum to carry to the next support levels down. And so you see, you follow this across, this was an area of support back up. Support back up. And for those of you that are new to things, support is an area, the opposite of resistance, where the price has trouble dropping below and keeps bouncing back up from a certain price level, which you see the support back up, support back up. So they're saying if it did break below this support level here, then sell. So you might have a pending order just below this blue line that if it hits that price, sell. And then take profits at the support levels down here are the suggested prices for potential take profits. So this is the way all of these technical analysis signals work from within the mobile app and from within the web trader. Is it gives you an idea of the preferred direction for a market move and then gives you a backup for a pending order in case the market completely reverses and establishes momentum in the opposite direction. Type OK if you're with me on how to interpret these technical analysis signals that you find within our app and the web trader. Or if you have any questions, now's a good time to ask if you have questions about these signals, how to interpret them. Okay, and if I see any questions pop up, I know it takes a little while to type, I'll address them as we go along. So let's go back, and we obviously could go through more signals, but I think maybe what we'll do is take a look at that GBP USD maybe on the full screen instead of the app. Let me leave the mobile app. And what we can do is log into the web trader. The web trader login being right here. And once you log in, then you're in this platform that has a similar look and feel, similar to the AvaTrade Go mobile app. And again, you can trade on your MT4 and MT5 accounts from these platform options. And so if you click on this tab, just like in the app, you can switch between your accounts, demo, real, etc., MT4, MT5. So it's a user interface that you can trade on any of your accounts with us with these platforms if you prefer them. I know this account says real. It is kind of a dummy real account. It's more like a demo account that I'm using here, but I wanted all the live features to show, so I've got a mock real account here. But you certainly can be trading on any accounts that you have as we go through the webinar. Now, these are positions from the last webinar. We understood that inflationary pressures were there. We looked at the fact that the US dollar could be weak, and also it was a fundamental news webinar. And so we looked at the war in Ukraine specifically, and that there were boxcars, train cars lined up, unable to get out of Ukraine, full of wheat and other grains. And I don't know if you realize, but Ukraine is a major world supplier of grains, wheat and other grains. And so we understood from the fundamental news, weak USD because of high inflation and reasons specifically for grain products to rise and crude oil to rise because of the war with Russia and Ukraine, the Russia being a major supplier of energy to the world and that being disrupted potentially with the war. We knew there were fundamental reasons both for grains and for crude oil to rise. Multiple reasons for it. And so we took moves in the last webinar based on those fundamentals. And we also looked at the technical entry points. And you see these have been running quite well. could close them in profit if we wanted to, could let them run. Just to get them out of the way, I'm going to close them now. Let me get rid of these, and we'll start fresh with new moves. Okay, and there's no guarantee every trade is going to result like these ones, but we based it on fundamental news in the last webinar, and you could go to our YouTube channel if you want. This webinar and all the past webinars are recorded and posted by tomorrow. This one will be posted typically by the next business day. They're all uploaded to our YouTube channel, so you can watch and learn from the strategies. Even if the movement isn't relevant anymore, you can still learn from the past webinars based on the strategies we're running through to apply those strategies at any time. You know, if it's not a war that's happening, it's Brexit. If it's not Brexit, it's a pandemic. There's always some big fundamental news aiding your decision in terms of which direction you might prefer to trade. Okay, so let's take a look then currently at GBP USD we were looking at. Okay, so we'll bring this up. Let me expand the chart a bit on the GBP USD. We'll go off the 1 week candles. Let's go just look at today, 30-minute candles. And we see indeed the pound did spike up against the USD, and it actually hit a resistance level. Let me drag this line up. It hit a resistance level right up here. Look at that predictable reversal. If you want to talk about technical analysis coming through in a way that you would expect. If you saw the news today, you understood that inflationary data was coming out. If you knew that economic calendar earlier today had those numbers coming out, and you were ready for those high inflation figures to come out, you easily could have bought on the pound and known where you would exit. Okay, if you were buying on the pound against a weak USD today, knowing all that inflationary data was coming out, look at this old support level. And the rule of thumb with support and resistance theory, and it doesn't always work out this way, but many times it does, that old support, once broken, becomes new resistance. And so let me walk you through that. Support here, it tested this price back up. It tests that price back up. So now it established support. It comes down to that price back up. Now, once it breaks that support level, look, after the momentum caused the support to break, look how it becomes resistance. The old support, now resistance, back down. Resistance here, back down. And then today, as it was rushing up, if you would have bought on the pound USD, you could have had your take profit programmed right at this resistance level. And look, as it hit the resistance, right back down again. Okay, so very predictable movements many times if you look at the fundamental news and then also combine that with the technical chart to find the support and resistance levels to see, is it trending? Is it on a move where it's going up and down? That's ranging movements, up and down, or a trend is where it's going and keeps running. Okay, right now it's ranging. In the past few days, up, back down, up, back down. So for now, the GBP USD, you can draw lines of the upper end of the range and the lower end of the range down here and say, okay, looks like it's on its way down in that range now, GBP USD. And so the US dollar weakened with the inflationary data as fear dropped and the markets went up. But now think about, why is the US dollar strengthening now? After the knee-jerk reaction of the US dollar weakening because, oh, fear dropped, inflation wasn't higher than expected at least, fear dropped, US dollar weakened a bit with that as folks rushed back into the stock market and the indices went rushing up. Why would the US dollar now start to strengthen and maybe come down and challenge this support level? Fundamentally speaking, what have the US officials that decide monetary policy in the US, what have they basically promised multiple times will happen this year with regards to the interest rate in the US? Something that would cause the US dollar typically to strengthen would be increases in the interest rate basically are expected each time the FOMC committee in the US, which is the group that decides this type of thing, each time they meet this year, which is expected to be like 5 or 6 more times, right? they're expected to have an interest rate increase maybe each time they meet, multiple times more this year. And not just maybe 0.25%, but perhaps even 50 basis points all at once with some of these increases that are expected. So there's no guarantee that will happen, but that's the expectation. And so this was an opportunity. Once you saw the pound get to this resistance level, not only to take profit on your buy position, but to sell, to expect that, hey, the US dollar is not just going to keep weakening forever here, because the expectation are increased interest rates. Okay. Now this entry point, I don't necessarily love, because we're not near the resistance anymore. If we look back 3 hours, these are 30-minute candles. So 1 hour, 2 hours, 3 hours, this was the spot maybe to sell from, with the understanding that, hey, US dollar has a lot of reason to strengthen here, with interest rate increases expected multiple times moving forward. So it doesn't mean it's too late to sell on this, by the way. The signal from earlier today came through nicely with the pound rising to the resistance level. Now we see this pulling back down, and momentum has been established on these 30-minute candles. It looks like a downtrend. It even broke below this little corner right here. This little, if I pull this down, you see this was a little bit of support right here, and it bounced before breaking below. We see it broke right through that price level. And so if you wanted to short this, the technical analysis shows a downtrend now. And if you understand the fundamental bigger picture, US is expected to increase interest rates. Right now it's 50-50 risk, potential profit. If I sell on this and I say, okay, I'll put my stop loss above this resistance and I'll put my take profit at the support, that's almost the same distance to the take profit as the resistance. So I could risk about the same amount as going after potential profit with an established downtrend. Okay, so even though you might prefer to sell from closer to the resistance, it's not necessarily too late to sell if you feel that this will keep dropping, right? I always qualify things. I'm not saying you should sell if you think this could keep dropping. The technicals aren't that bad on it, really, even though it's already dropped quite a bit. So if I was going to sell on this, I probably would put a take profit right near this support level down here. So let's say 129.90. 129.90 might make sense. And then the stop loss, I might just go above this little support level here. This old one where it hit and bounced and broke through, and this came down and broke right through that level. So I don't have to risk all the way above this resistance level. I could just go above this little corner right here. And if it breaks back above there, then I take a small loss, right? So 130.30 maybe to the stop loss. And so I see my potential profits double approximately my risk. Possible loss 1260, possible profit 2740. It's moving because the price is moving. Now I can use, remember I said our platform helps you with your risk management as well as the app. So very cool feature. All I have to do is put the trade size I want based on the amount I want to risk. So my possible loss was 1390 at a trade size of 0.1. What if I know I'm willing to risk, I don't know, 250? I'm just making up a number. So you should go into the trade knowing how much you're willing to risk. What percent of your balance per trade? What amount dollar-wise or euro-wise or pound-wise are you willing to risk per trade? And so once you know that, then all I have to do is put the trade size that makes sense. If I put one full lot, I'm risking 143. I made up a number of 250 I'm willing to risk. So I'm going to put 2 lots. And now I see 310, so I need to go a little slower. Or I mean a little lower in size, 1.5 lots. You see how it's calculating for me, 232. I can go a little bigger, 1.6 lots, 262. I wanted 250, so now I go 1.555. And there I'm pretty close to 250, 243. Okay, so if that's the amount I was willing to risk, now I know the right trade size for the stop loss that I chose. And my possible profit is 380 or so. Okay, possible loss, possible profit, and then I can sell. Okay, the other option on that would be to put AvaProtect, we'll do an example with AvaProtect. That's available only when you're using AvaTrade Go or the web trader. AvaProtect is a special feature that's available on gold, silver, and FX pairings. And so let's go through an example maybe with crude oil as to actually, let's use gold. Crude oil doesn't have AvaProtect, but I do want to look at crude oil. Let's use, I wanted to switch from currencies to commodities. So let's look at gold. And we'll go to a bigger picture on gold. 2-hour candles. 4-hour candles. By bigger picture, I mean, I want to see more time. Okay, now on the 4-hour candles, I start to see, okay, here's a resistance level that we've gotten close to. And we're getting close to 2,000, which is another area of resistance. You see resistance down, it broke above, but then came right back down, and that became resistance again right here around 2,000. This was the all-time high up here on 2,070, okay? With multiple interest rate increases coming, you might say, okay, there's high inflation, but the inflationary data did not go higher than expected in the US. That was actually looked at as good news. And with interest rate increases coming in the US, for the most part, it's been promised, no guarantee, but the promise basically was multiple interest rate increases this year as a likelihood. And so that would serve to pull gold down if the US dollar strengthens. If inflation is brought down because of interest rate increases, which is the hope, that's why they want to increase interest rates, is to get rid of the hyperinflation, then that takes away the appeal of gold, which is an inflationary safe haven. So if you get rid of inflation, then the opposite of gold climbing, you would expect gold to come back down then. So none of this is guaranteed, but this is the fundamental news situation. We just got a spike up in gold today as the fear kind of dropped and inflation was still showing, but not higher than expected. As the US dollar weakened, gold came up naturally. And now we see this resistance level, if I pull this line up here, okay, which was challenged today, resistance and down in the past. It just hit that spot today and pulled back down some. Okay, so it respected that resistance for the time being. Okay, now let me get rid of some of these lines. Different candle lengths, whether you're scalping, doing different things, that's what some of these other lines were for from past sessions. So the bigger picture is I see a range from here down to here. Resistance, support. Resistance became support, support, support. It broke below that. It became resistance, resistance, and resistance. Okay, resistance broken, became support. Back below, it was resistance. And then down here, we see support, 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 support. So this is a range here down to here where we see multiple points of contact for support and resistance within this range. That's basically between where it is now and 1900, the price 1900. So if you look at the bigger picture, a longer term type move, and you say, I think as interest rates are increased, that'll help bring gold down, you're willing to risk that it could climb for a while. If you're looking at it from a longer term perspective, then you could say you be willing to put your stop loss maybe above this resistance up here. Not just this resistance that it's having trouble breaking now, but the next one at 2000. And so if you get your stop loss up here, as an example, that's still risking less than the potential profit to the support level down here. So you're talking risking about $45 an ounce to make a potential profit of about $72 an ounce to the support level down here, or even $80 an ounce. Okay, so it's something to consider. Or you could do a pending order up just below 2000 up here. You could have a pending order that if it does come up here, to sell from just below this resistance here. Now, I keep talking about selling because I outlined the fundamental news that might make sense to do that. You could have a different opinion and want to buy on gold, and certainly you could. There was some momentum on upward movement in the short term there is momentum. Okay, the dollar's been weak and gold could keep climbing. I'm looking at a longer term view with interest rate decisions looming, that some of this resistance within this zone anyways, this level of resistance and this one up here, that might hold in the bigger picture before some further dropping occurs. So obviously no guarantees, but let's say you wanted to short gold right now. You could, if you have a short-term view, but you think it could go up, but you want to go for potential drop, you could use AvaProtect as well. So AvaProtect can protect you up to 2 days for a small premium cost. All the profits are yours if it goes the right way. If it goes the wrong way during the protected time period, up to 2 days, any losses are added back from the protection. So that's a way to go as well for a shorter term move, 2 days or less. And you could do both. You could say, okay, I'll take a move, whether you're buying or selling, the point is the same. You can protect this move up to a couple days. Let's do a simulation of selling. Take profit. You could have down near 1900 down here. Let's say just above 1905. Stop loss, we don't need one for a couple days. We're protected with the AvaProtect. And so I can see the ratio is about 6 to 1. Potential profit 330 plus. The cost of the protection only 53. If I'm willing to spend that fictitious number I made up, 250 per trade, to risk that much to go after my profit, I actually can take a bigger trade than this. Okay, a quarter of a lot costs me 268 for the protection. 0.23 is about 250. So maybe I'm willing to spend 250 on the bet that the US dollar will strengthen over the next couple days as the traders start to think about looming interest rate increases. And it seems that the Ukrainian Russian war is ramping back up again. That could create more fear, which tends to strengthen the US dollar as well. So maybe you're banking in the next couple days the US dollar re-strengthens and gold pulls back down, even in the short term, not even the long term. And if that's the case, you can protect yourself on the downside for a flat cost and have a potential profit that's much, much larger. Okay, so in this case, I've got this set up for a sell position with AvaProtect in place. And when you have a trade with AvaProtect, you'll see this gold shield. You see the gold shield here. Okay. And by the way, if I click on that trade info, it shows me how much time I have left on my protection to the minute. Okay, remaining time, 44 hours and 26 minutes of protection. So this could go flying $100 an ounce the wrong way, and I'm not worried about it. I'm protected. If it goes $100 an ounce the right way, I'm really happy because it wouldn't take much movement to make back the premium cost, which is a fraction of my potential profit. All right, so any questions, comments, input up till now? You can use the chat box to communicate. Well, I must be very clear. No questions so far. That's a good thing, I guess, that I'm not confusing anybody. If I see any questions pop up, I know it takes a while to type. I will address them. Now let's look at crude oil. I started to mention crude oil before. And by the way, we have features now that were added. You can have multiple charts up at once. Okay? I can bring up to 4 charts. With different layouts. There's 3 charts. Okay. Let's go back to the single chart because I just want to look at crude oil right now. But sometimes you want side by side to compare charts. And it's nice that this feature was added. Really helps with when you have correlated instruments. Meaning if you think when crude oil goes up that the Canadian dollar should strengthen, you could have 2 charts next to each other to try and match up the movements. Okay, Alfred, I'm assuming you're talking about if you have AvaProtect running. If you get stopped out, it's called, if you don't have enough funds in the account to cover further negative movement and it's going the wrong way and the trade closes as a stop out, if you had it protected, whatever you lost on that stop out, if it stopped out during the protected time period, you'd get all of the negative added back to your account even after the trade was closed. Okay. And also it shows you margin impact. If you don't have enough to open the trade, you'll know. Like this trade right here, if I wanted to open it, margin impact about $50. You see I have available over 96,000 in this dummy account. So I obviously could open that trade. Available means free margin. What's available in your free margin to open trades. Allocated means what's being held in margin to keep the current trades open. Okay, so crude oil. Why is crude oil bullish right now? Two reasons, right? A weak US dollar and war between Russia and Ukraine. Fears about energy supply. It's been driving up gasoline prices on everybody all around the world. Okay, so and energy costs in general. Now, since things are starting to ramp up again, unfortunately, with the Russia-Ukraine situation, Russia reportedly has the lead general from the Syrian fighting. He was leading, I guess, the Russian efforts there, and I think the expectation is a renewed uptick in the conflict, in the war in Ukraine, and from the Russian side having renewed vigor to attack some more. And with that situation could come stronger sanctions, maybe energy sanctions from the rest of the world. And so it makes sense from a fundamental standpoint why energy prices could rise up from this situation in the coming days. And so that's a big driver of crude oil movement lately. These fears about supply disruptions of crude oil and other energies, natural gas, out of Russia. And so we look at 4-hour candles. We see pretty much all day crude oil has been rising. And so if we go to a bigger picture, I think maybe it's warranted in this situation to go something like 1 week candles. Look at that. Okay, 1 week candles. Look at the spike up. This is when the war first started. This is when there was hope that it might end. And now look at the support level that was formed. 1 week candle. Support, back up. Support, back up. It touched again here and seems to be climbing again. Right from these two lines. This is an area of support that has formed just since the war began. And so if we go to 1 day candles, we see the same thing. It's even more clear in the 1 day. Remember I said old resistance becomes new support many times. So here's the 1 day candles, resistance, resistance, resistance. It tested it right back down, resistance. And then once it broke through, look how that same price when it came back down became support, support, support. Okay, old resistance becomes new support. So that's what's happened. And this has confirmed itself as support right now. What would make this support level break? A peace deal likely could cause this support level to break. The fact that Putin just announced today that the peace negotiations, the truce negotiations have not gone well at all. Basically, I just read a headline before starting that he said they're at a dead end with negotiations. And with this new general coming in for the Russians, it looks like they're ready for all-out war some more. So the same thing that drove crude oil prices up above 120 could happen again. It's what it looks like. It's set up fundamentally, potentially, for that to happen. So the bigger picture here could be a buy position. Now, could oil pull back down today a few dollars? Sure, could happen. Could there be a peace deal and oil comes plunging down? Sure, could happen. But trading isn't about certainty. It's about what do you think might happen more likely than not, okay? And it doesn't look like a peace deal is close. It looks like more tension and maybe more fears about crude oil supply out of Russia and natural gas supply out of Russia. So it looks like there's an impetus for this support level maybe to hold. And then if we're just looking at technical analysis, without considering the fundamental news at all. And some traders do that, by the way. This looks like a nice support level anyways. It's a very nice looking support level, old resistance, new support, support, support. So just from a technical perspective, you might say, I like this setup and I'll buy, okay? And you could put a pending order below the support level down here in case it breaks below to sell, because you never know when the headline might hit that is unexpected that could reverse the market, okay? So you could have a pending order down here to sell. If it breaks below 92, maybe there was a peace deal, right? As long as it doesn't break below there, it's an established support level that you could think about buying from as well. Okay, so take profit. I always like to say I'm not greedy with my take profits. So what I'm saying is here's the high. And if you're really going for it, you could say, okay, 126, 127 up here, I'll put my take profit up there. Okay, maybe it'll reach that high again. And it very well could. Or if you're more conservative and you say, nah, I'll take my profit if it reaches the first major resistance, which really is here. Resistance, down. Okay, so if it gets here, you still have a larger potential profit than risk to get below the support level. So that's up to you. And really what you could do is program a take profit up here, and manually, if you see it get near this resistance, you could do a partial close. Okay, partial closes are easy to do. You go to the close trade area, and then you change the trade size to the amount you want to close, and it'll leave the rest open. So this could be a spot you could consider a partial close if it did go the right way, and then leave the rest open in case it reaches the higher point. It's up to you. There are different ways to handle that. And so take profit. Again, you can be flexible. I'm going to put 115. Just to say I don't have to get the highest point that it was at recently. I'll go halfway up. Stop loss, I could go down here at 92, just below the support. It would have to break the support level to hit that price. Okay, so with that setup, even with my stop loss all the way down here at 92, below all of this support, take profit, 115. If you tap on the chart and move the lines after you put your settings here, it resets it. So if anyone gets confused by why my numbers just reset, that's what happened. So you see my possible profit much nicer than my risk. 726 possible profit, 424 possible loss. Again, if I'm willing to risk 250, then I better take a smaller trade. 0.03, I'm risking 253, okay, close enough for me. And my possible profit, much larger. And that's with taking profit at the first resistance without even going for the top one, okay? So there I go. Trading with a nice support level, technically speaking, going with what I think the fundamental news says makes sense anyways, and taking profit at the first resistance level. But like I said, you could go after the higher one if you felt that it'll reach that higher one. I think it easily could if this war escalates worse and worse. And it seems that it might. I don't think Russia's ready to take a loss in this situation right now with the war situation. And so the support level here seems like it could be solid. If it breaks, the stop loss is just below the support level. So it's minimal risk, much larger potential profit in this setup. Lennon, yeah, this session is recorded. By tomorrow, it'll be on our YouTube channel. So go to AvaTrade's YouTube channel, go to the English webinar section, and you'll see my webinars dated for the past weeks and months. And you'll also see Naeem Aslam, our chief market analyst, and others with live webinars that are recorded and also posted there. So you can see pretty much up to the date information for moves like this. It's still relevant tomorrow, most likely. If you catch it the next day, if it's a short-term move, the strategy is still relevant, but you might have missed the price. But still, they're worth taking a look at just for learning the concepts, for repetition on the strategies. Okay, any questions before we end things? We've been going for a good 45 minutes. We easily could look at the major indices, individual stocks, similar type movements going on right now. My next session will be Thursday. My Thursday sessions are earlier in the day, so 11 a.m. UK time on Thursdays typically. Every once in a while, I need to move it from Thursday to Friday or to Wednesday, whether it's holidays or just my unpredictable schedule sometimes. But I try to make them Tuesday evenings and Thursday afternoon UK time for my sessions, my live sessions each week. All right, everybody, I don't see any new questions popping up. Thank you for attending. I hope it was helpful for you. And I think you'll have a lot of nice movements here the rest of this week. A lot of fundamental news driving the movements that I think helps make things quite predictable for you. Natural gas probably looks quite similar to crude oil. Yes, it was requested. Before I end things, let's look at natural gas. Okay, we see a big bull run up on natural gas. Why? Because of supply concerns out of Russia. If we go to 1 hour candles, a little bit of a pullback today. After it went up the last couple hours, it pulled back. Okay, you could see that as an opportunity if you want to buy on this. It's come down some. If we look at 1 week candles, like we did crude oil, it's not as advantageous of a spot as the crude oil if you're wanting to go long, if you're wanting to buy. Crude oil came down over the past few weeks since the war started, and natural gas is still way up there. It's up at the highs that it reached with this war situation. So you didn't get a big pullback like you did in crude oil to try and take advantage of if you're bullish on crude oil. If you're bullish on natural gas, you're buying from a high point. There's no way around it. It's up there the past few weeks. If you think with interest rate increases coming in the US potentially that the US dollar strengthening could pull natural gas down, then maybe you take a shot at shorting this. But certainly you're going against the fundamental news with the war that is actually helping to drive natural gas prices up. So I think that's a tough trade right now because it's at such a high point, but it has reason to potentially keep climbing is the thing. But it's not the best entry point if you like to get in low when you're buying. It's certainly not at a low point right now on the 1 week candles. If you look at the 1 hour candles, you could say, okay, I got some pullback. Maybe if you're bullish on natural gas, but you don't like the entry point, you could look at this support level down here. You could say, okay, if it comes back near this support level, then maybe I'll buy. Maybe 6.4 is the price you like or something like that. If you don't like the current price, but you do believe there's reason for it to go up, a lot of times patience can pay off. Just be patient. If it's not the price you like, wait. And then if it gets to the price you like and the fundamental news still tells you to go in a certain direction, then you make your move. Okay. For me, I like the look of the crude oil chart better for people who are wanting to buy. I don't like the look of this chart as much as in terms of being advantageous for buying on. If you're shorting it, it looks nicer. But then that's going against the fundamentals. I always try and line the fundamentals up with an optimal or a beneficial technical entry point as well. All right. Thank you all for joining. We're out of time, as I was saying before. So good luck with your trading. And till next time, I hope you make lots of profits. Bye for now.